Passive income is best defined as incoming revenue that requires little or no time and effort to maintain. So, in order for this video to not be clickbait, the option strategy I'm about to show you must generate revenue while only taking up a minuscule amount of your time and effort. And I'm here to tell you that you clicked on the right video. Don't expect to be a millionaire overnight, but do expect that you can generate some decent, moderate, passive income returns every single week with this strategy. It's going to require two simple things: committing capital and doing a bit of research. Pretty passive. And I'm going to put my money where my mouth is. Later in this video, I am going to be doing a live trade so that you guys can all really understand and see how to do this concept to really drive things home. But first, let's get two things straight. This video does not have a course. I'm not here to make money off of you, and this is not financial advice. I'm merely here explaining a tool in the stock market that's often not common knowledge. Whether you decide to use this strategy or not is entirely on your own accord. All right, you ready? You're ready. This passive income strategy is called selling cash secured puts. Now, what the hell is that? Well, let's start at the beginning. So on the broad scale, options in general inside of the stock market are a tool that allow you to essentially bet on the future price of a stock. And each one of these bets is referred to as a contract. And every option contract has a buyer and a seller side. And on every one of these contracts, there's always a transaction fee, which is often referred to as the premium. This premium is paid from the buyer to the seller. And it is this premium that is exactly how we are going to be making passive income in the stock market with this strategy. In the case of cash secured puts, you are going to be the seller, so you're receiving this premium. Now, within the world of options, let's narrow in on what is known as a put. So a put option contract gives the buyer the right but not the obligation to sell 100 shares of whatever company they decide to do business on to the put writer or seller of that specific contract at a predetermined price within a specific time frame. So when you're on the seller side of a cash secured put, you are agreeing to buy those 100 shares at this strike price. If the buyer exercises the option. That's not always the case, and I'll explain that later. So you are the seller of these contracts, and on the buyer side of it is someone who has 100 shares in company XYZ, right? It can be anything. And you as the seller are saying that you will bind yourself to the obligation that if the buyer wants to, you will purchase their 100 shares at the strike price you guys agree upon in exchange for that premium. And so with the buyer paying you that premium, they now have the right to sell you those 100 shares of that company at any point in time at the strike price you guys agreed upon, regardless of what the stock is actually trading at. So where you make your passive income is that upfront fee. So this all sounds great and we can start making passive income today, right? Well, there's no free lunch, and you guys are smart enough to know that. Any smart person can listen to what I'm saying and know that maybe it sounds either a little bit too good to be true, or for some of you who are especially perceptive, you're taking a little bit of risk in this stock price and being bound to a contract. And you're somewhat correct in thinking that, but I'm going to explain further. Here's the catch. Being able to successfully sell cash secured puts requires decent upfront capital and some risk management. There are three possible outcomes when you sell cash secured puts. Option one, the contract expires worthless. As far as it goes for making passive income with options, this is the best case scenario for cash secured puts. So in this scenario, your contract has an expiration date 3 weeks from now. Let's say you receive $200 upfront at the stock XYZ for a strike price of $65. 3 weeks later, that stock is currently trading at $68. So since the stock is trading at a price above the actual strike price of $65, this option is going to expire worthless because you will only be executed on, in almost every single scenario because it doesn't make sense otherwise, you will only be executed upon if the strike price is above what the stock is trading at expiration. So the price is above the strike, everything is golden. Option expires worthless, you're gonna get your collateral back that you would have had your cash paid to those 100 shares. You now get that back and you keep the $200 in premium. And at this point, you are completely free to do this process again, and all that money is your own, and you made out with a free $200 off of your collateral. And you'll get different returns based on how far out you sell these options, what's the volatility of stocks, but I'm not getting into that stuff in this video because, again, none of this is financial advice. You do your own risk management. But let's get into option two. You buy the contract back. Okay, this scenario is still great for you because you'll still be making passive income, but it does require one extra step. And I know some of you might be complaining, oh, that's not passive income. You're clicking 2 buttons in your Robinhood portfolio or your Schwab account. It is still as passive as it's going to get in terms of making hundreds of dollars a week. Let's take the same scenario. You sell a contract and you receive $200 in premium upfront. A few days go by and you decide that you want to get out of this contract. You don't want to be on the lam for 3 more weeks on a stock that is maybe going to trend below the strike price. For whatever reason, you decide you want to get out of that contract. That's the bottom line. And that's no problem. All you're going to do is buy the contract back. Time for a little bit of extra context. So the premium price that you were paid to initiate this contract, it almost acts in its own as a stock, is how you could think of it. Again, that's just an analogy. Options do not operate like stocks. They're much more volatile, but think about it for this example. You sell the contract day one for $200, and a couple days later, let's say it's trading at $160 or $150. If you wanted to get out of this trade and secure profit right away, all you would do is take $150 from that $200 premium and buy the contract back. So paying to buy this contract back frees up your collateral so you gain all of your money back and you secured a profit that is the difference between the premium you were paid at the beginning and what you bought it back for. Again, technically less passive, but it's just a couple button clicks. Now let's get on to option 3, an option that you probably don't want for a passive income strategy on cash secured puts. Keep in mind, you're making this contract to do business in a financial market. And with every bargain, there are strings attached. Getting exercised on a contract means the strike price is above what the stock is currently trading at, and the buyer chooses to execute and sell those 100 shares to you at the strike price. Moral of the story, you get exercised and you are on the lam for $30 shares for 100 shares, and they take your collateral and it's converted into 100 shares. Now, if this sounds scary, it's not as scary as you would think. If you are checking the stock price even every so often, you will have ample time to buy this contract back and get your collateral back. But it's important to do this strategy on stocks that you wouldn't mind owning because there is a real possibility that you will get assigned. I'm not going to be like financial gurus and tell you it's all gravy. There is risk in everything, and this is still about as passive as you're going to find in the stock market besides just buying and holding. But chances are, if you clicked on this video, you want to make some extra returns. So now that you know the 3 options and what the risks are, let's get into a live trade on my Robinhood. Okay, so we're over on my Robinhood dashboard now, and as you guys can see, I just loaded up $1,000, and the stock I'm going to be choosing is American Airlines. So this stock falls perfectly in the $1,000 that I had loaded up for this challenge. And keep in mind, so the share price is $10.66, but if I go over to trade American Airline options, and we are going to be selling a put. So today is Friday, and since most calls for companies, unless you're trading something like SPY, will only trade on weekly calendars, they're all going to expire on Friday. So I'm actually going to go 2 weeks out at the $10 strike price. And so as you can see, decent, like a free $16. And obviously you can find companies that have more volatility or more juice for better premiums and things like that, or you can sell further out. But for this challenge, I'm just going to choose something for 2 weeks for the point of this video. You can trade it in 1 week increments. If you want weekly income, you can trade monthly if you want monthly income. And it really just depends on how you want to do it, right? But yeah, so we're going to choose this $10 strike price. Okay, so as you can see, my credit's going to be $16.97 with my collateral being $1,000. I will then close out of this probably on Monday for a nice profit. And this literally is passive income. I did not do anything aside from just put my $1,000 in my account, and it's going to get a free percentage and change. It's like I said at the beginning of the video, not a millionaire overnight, but consistent returns is what you're going to get from this. Okay, and so there it is. As you can see on my dashboard, I have the options collateral or $1,000. It's currently in holding because you can't spend that money, because if I did get executed on this, which I wouldn't, I would close it out beforehand to secure profit. If I did get executed, it would call away the $1,000, and in return, I would receive 100 shares of American Airlines. As a reminder, with this contract I just bought into over the next 2 weeks, there are 3 outcomes that I mentioned earlier, right? It'll either expire worthless, I buy it back, or I get executed upon. From here on out, I can pretty much just coast, and that's free money. Well, a lot of people out there are going to try and promise you 500% returns over just a day, or an overnight millionaire strategy. These financial gurus, they make their money off of selling you those ideas. I'm not here to do that. I'm showing you what you can actually do for passive income. And if this is in any way underwhelming and 1.6% in 2 weeks doesn't sound crazy, keep in mind the stock market over the past couple of years has only gone up 10% annually. So imagine if you could do 1.6% 26 times a year. So if done consistently over the course of a year, that could end up yielding 50% profit, which far beats the market. And obviously it's not always going to work out like that, but you could see how this is very powerful if you can find a stock that you really like and just keep playing it. So ultimately, it's a numbers game that can prove to give you a couple percentages of profit every week or two. Make sure to do your homework and have your own risk management. The stock market is a risky place with a lot of variables, and cash secured puts are no exception to this. There's a lot of different ways you can do this cash secured put strategy, and this video is by no means an end-all be-all guide to it. And there are many ways you can find stocks that maybe are better value or juiced, some people will say, but this video is not about that. Personally, I only use this strategy on companies that I would like to own, and it's a way to either get in at a cheaper price, earn a little passive income on the side, and if I do get assigned, I'm owning a company that I'm comfortable owning. But there you have it. That is passive income with cash secured puts. If you're interested in options, entrepreneurship, or making money, make sure to follow my channel. I do a lot of cool stuff like that. Videos come out every single week. And if you really like this video and other stock market stuff, chances are you do if you're still here. Make sure you click this video right here where I do a put challenge on the buyer's side. Ends up pretty well. And finally, like this video if you like money. Thanks for watching. Have a good day.